All right, everybody. Stocks by the numbers. Welcome back. We're looking at Origin Materials Incorporated, ticker symbol ORGN, listed here on the Nasdaq. Stock $1.56 today, closed up 1 cent, 0.6%. And basically, what I'm seeing here is a potential flagging taking place, but also we did just kind of hit this top line resistance here. I'm connecting the top of what is this, August 20th, $1.73, just kind of cutting across here to that top on Thursday last week, $1.64, and you can see I drew out the bottoms as well, and we potentially had a rejection here off the top again for the third time, so we can maybe pull back here. This is a 1 year chart, by the way. We can potentially pull back to this 1 year fib, 132, and the moving average maybe 128, 130, and maybe even down to like 120 here at the bottom of the trend line. But in my opinion, if we do have a big drop now after bouncing off the fib, if we come close to kind of retesting it or meeting up with this 20-day moving average, like the mid to low 130s, in my opinion, would be a good entry. But either way, even at $1.56 might not be the worst case scenario, right? We saw last quarter, actually the last 2 quarters, we saw losses widen. However, the company recently got a couple of positive catalysts coming in. So this is the last time I believe we looked at the stock. Let me just double check through the channel. Last video, May 22nd, which was about a week after these earnings came out. I wanted to see how the stock was going to react. And you can see we ran up going into the earnings, and then we had a drop, went back to where we were, kind of came down. And then now, last quarter's earnings, we really had a pump up with some positive analysis coming out of B of A. But we can see that the revenue came in above expectations here, around 5%. We missed on the EPS, bringing in a loss of 11.7 cents a share. Estimates were only a loss of 10 cents a share. Then this last quarter, we technically missed on EPS again and missed on revenue now this time by about $750,000. However, the stock jumped again with some positive outlooks, some positive updates from the company, and of course, positive notes from B of A. So let's find out exactly what happened. So Origin Materials set for early profitability. Analyst highlights positioning for long-term growth. Upgrades stock. Company reported wider loss. Secured a 2-year MOU for pet closure production, projected to generate over $100 million in revenue starting in early 25 and increasing significantly in 2026. And this is what I believe we spoke about when we looked at the stock in the past, right? We spoke about how it was going to potentially be quiet. They're kind of like, making a name for themselves. They're going to have a couple of orders coming in. They're looking to generate whatever it was, 100 million in change. But then we were looking at the projected growth going out to 25, 26, 27. And that's why so many people were pumped about the stock. So here in this moment, when we talk about these losses, again, if they're wider than expected, maybe the stock takes a hit. You have to deal with these swings, the short-term volatility. But if the long-term potential growth is there, then you may turn around a year and a half from now, and the stock could be up at, $4, $5, $6. And we're talking about it today at about $1.50, right? And we had the company hit lows. I'll come back to the article 1 second. But we had the company hit lows. Yeah, it was down here. It was sub 50 cents. And since then, it's been on a tear, which, as you see, was about first quarter here at 24. And we've been on the up and up since then. So stock is up roughly, about 300% from those lows. And we also spoke about this gap down right here. Yeah, it was like 363, I believe. What's the low on this candle? 364. So technically, that's where we gap down, right? And you can see now, though, after dropping, now the stock is predominantly back above the 20-day moving average. It's been on the up and up. So we're going to have this potential U-turn and fill that gap maybe back to mid threes and maybe get back to the fours if everything goes according to plan. Let's go back to the article. So yeah, 100 million significantly in 2026. B of A analyst upgraded the company to a buy from a neutral rating, raised the price target from $1.35 to $3. So this is what I mean. If the revenue is going to start to come in now, and if more revenue coming in is going to translate to more narrow losses and potential profitability as they're projecting, then the stock's going to be off to the races. You're talking about multiple positive catalysts coming out consecutively, and we're going to potentially see that snowball effect to the upside. So $3, I mean, we looked at the numbers last time. I know the book value is like 270 or something. So $3, in my opinion, is actually conservative. But, you know, I mean, I respect the analysts for upping the price target. But in my opinion, I think it would be safe to say, because, again, it's not guaranteed, but we know that one of the rules is usually gaps fill. So if that gap does fill, again, you're looking like 364. So you probably could have went $3.50, $4, but that's fine. They maintain a positive outlook on Origin biomass conversion technology. The PET closures have advanced. EBITDA break-even estimate to 2027 from 2029. So now that's a big difference. You're telling me you're ahead of that schedule by roughly 2 years. So this is why you could maybe say it's now or never. Additionally, there is potential for profitability as early as 26 due to ongoing discussions for further contracts and licenses, adds the analyst. Also, the analyst sees significant long-term potential in Origin's technology to convert cellulosic materials into chloromethyl furfural, a fern-based chemical, and hydrothermal carbon. Interesting. While this process takes time, CMF can produce functionally superior products like polyethylene furanoate, with potentially higher margins and lower capex compared to traditional methods, writes the analyst. Analyst projects $10 million in licensing income in 27, increasing to $20 million in 2028. Yep, same analyst. Origin is seeing accelerated demand for the PET caps technology, leading to potential upside valuation. Based on how disruptive this new technology could be for PET bottles, our revenue estimates have significant upside. About a year ago, Origin reported its discovery of a process to produce PET-based caps and closures, enabling plastic bottles to be 100% PET and thus fully recyclable. Origin said it has secured $100 million, 2-year contract, starting in early 25. So they're saying that revenue is going to really tick up and start coming in Q1 of 25. So we're approaching the end of 24. So that's why I'm saying, again, if you buy immediately here at 150, and then the stock, we looked at some trend lines. If it pulls back to like 130, 120, right? We know we have some short-term volatility potentially on the horizon. But if you're able to, as we say, piece your way in, add on the dips and just accumulate a position, accumulate shares, then it sounds as though when you turn around in, again, this time in 25, this time in 26, chances are the stock, based on this news, is going to be significantly higher, in my opinion, than where we're currently trading at. While we continue to see long-term value in Origin's biomass conversion technology, PET closures pulled forward our estimate of EBITDA break-even to 27 versus 29, with potential for profitability in 26. Very nice. And these were the actual earnings that came out, again, about a month ago. Revenue $7 million, slight increase from $6.9, same period last year. Operating expenses chunked up to $18.5 million from $14.4, primarily due to increased general and administrative expenses and depreciation costs. Nice car going by. Net loss widened to $19.5 million compared to $6.5 million in the previous year. Adjusted EBITDA loss was $12.9 million, up from $11.7 million. Cash on hand right now over $130 million. Which of course isn't a bad thing. Signed its first customer memorandum of understanding for PET caps, $100 million in revenue, we know this, 2-year term. Produced over 1 million caps to date, very nice, with commercial scale production on track to begin in the fourth quarter of 24. Fourth quarter of 24. Announced mass production partnerships in Europe with Bachmann Group and in North America with Reed City Group. Unveiled engineering innovations, tethered caps, designed to comply with EU single-use plastics directive. Negotiating potential licensing agreements to expand the PET caps business. engaging in market development activities for its biomass conversion, exploring various plant designs and potential sites for further scale-up of its technology. Co-CEO said, "We are excited to announce our first signed customer. Positions us well for future growth with over 130 million in cash and a clear path to profitability. We are confident in our ability to drive explosive growth in our pet caps business and broader technology platform." 2024 full year revenue expected between 25 and 35 million. Net cash projected to be between 55 and 65 million. So technically, if we go high end of the range, that's a little less than losing $2 for every dollar. But again, if we're going to slowly narrow that loss with all this new expected revenue to start coming in over the next couple of quarters, then again, we could get more positive quicker than a lot of people are expecting. But at least they're kind of restating their guidance. Obviously, if they lowered that guidance, the stock would have taken a hit, of course. Okay, let's just see. Any other news are we missing? Pathway to profit, no additional equity capital. We anticipate delivering multiple billions of caps to this customer over the next several years, which we expect will generate over 100 million in the initial 2-year term. Again, revenue expected to begin early 25, ramping significantly in 26. Therefore, to fulfill demand, we expect to build capacity well beyond our initial system purchases, which we previously announced as having expected capacity to generate between 45 and 65 million in annual revenue. Concurrently, we are negotiating potential licensing agreements. In addition to selling caps, drive explosive growth. This will further catalyze the revolution in recycling circularity. Okay, bring into the beverage packaging, food packaging. Ramp up in the first quarter of 25. During July, in Germany and Switzerland, we tested all manufacturing line subsystems at full speed, and we are pleased with the system's performance. Very nice. We also crossed the threshold of 1 million caps. Very nice. Yep, we have cash. With a strong IP moat and highly innovative and creative team. That's why, again, I have to say, in my opinion, even if this stock slowly gets back to book value or the gap fill, again, book value is like 270, gap fill would be like 365. So percentage-wise, there's a lot to gain here, even maybe over the next 1 to 2 quarters, if you're not planning on holding it that long. But if you're looking at this, again, as an investment, and I know that a lot of smaller traders out there like companies like this just because it's so cheap per share, right? It's $1 and change. So you can, if you have whatever, $1,000, you can have, 800 shares, 1,000 shares, right? You can have a little bit of a position as compared to something like an SMCI where you say to yourself, is it really worth it to buy like 1 share or 3 shares? And I understand that argument. So that's why, again, I have no problem looking at a lot of these kind of cheaper stocks, trading under like $5, $10 a share where you can really build a position. But it does sound like they are on the up and up. And unless we get really, I'd say unless like a big surprise comes in with future losses, then chances are it's probably going to be on the up and up, in my opinion. Especially if now, over the next couple of quarters, we're going to start to see more and more revenue come in. So out of curiosity, let's see. Yeah, look, so next quarter, again, estimated for about the first week of November. As you see, right now, we're looking for revenue of 8.3 million, right? So now we broke above the 6s and the 7s. Now we're at above 8. So this is why chances are it sounds like we may have a miss on the EPS. And we may again report a little bit of a wider than expected loss. But if the revenue comes in again at like 8.3, 8.5 million, 8.7 million, and they're able to show that, now we're starting to snowball, then in my opinion, again, even if you have the initial drop like we did last time, you may have analysts reevaluate the position and up their ratings. on the stock, right? So we can have another potential pop after the drop coming out of earnings based on future growth, right? And how analysts feel it's going to look 12 months from now, not just how it looks right now. But we'll wait and see. Obviously, that's in about 2 months. But again, on the technical side, it looks like it's maybe getting ready to pop up. But I just wanted to recheck the numbers real quick because the company doesn't have much debt right now. Okay. Yeah, so debt 8.9 million, 13.2, 13.1. Which again, I know it's, a smaller cap company. We're talking, 227 million market cap. But in my opinion, that's not a big deal. Again, we're holding 130 million cash on hand. We're going to burn through maybe about like half of that to close out the year in total. But if, again, I still say if like 3 quarters from now, which would be like midway through 25, if they're close to EPS positivity, or if they go net income positive, it's going to completely change everyone's outlook on this situation. And then people are going to instantly jump in at 2 and 3 and probably say that it can easily get to 6, 7, right? And all of that new volume now is going to further fuel the growth. But we have assets heavily outweighing liabilities, both the short and the long term. We looked at this last time, the way they really trimmed down their liabilities here. Yeah, assets took a hit, of course. We were approaching $500 million. As of last quarter now, we're down to about 431 million. But you can see we were at 80, 90, 100 plus million on the liabilities. Now we're sitting at about 40. So assets minus liabilities yields total equity. Total equity right now sitting at 390 million. Market cap 227. And again, we have 13 million in debt, but book value's been bouncing around, almost getting up to $3, pulling back a little bit here. It's sitting at 265. So again, if the company had to close its doors, liquidate everything in its name, supposedly worth 265 a share. Right now, $1.56. So this is why just off of book value, you can see potentially about 60+% gains from here. Or even more, obviously, if you buy a dip down 140, 130. But if we look at equity, 390 million. Minus debt, we're at 377 million, we'll call it. 377. And we'll look at last year for now. Well, no. This year, they were saying what? 25 to 35. Let's go in the middle at 30. And they were saying losses 55 to 65 will go in the middle at 60. So we're at what? 377. We make 30, 407, but we lose 60 is 347. In my opinion, plus the cash on hand. Plus the cash on hand. Which right now they said 130 mil. Let's cut it in half. We'll call it 60 mil. As, again, quote unquote fair value, you're looking at market cap of around 400 million. And right now the market cap 227 million. So if we're potentially doubling up, again, we're looking at north of $3 a share, and the gap fill is 364. That's why I'm saying, in my opinion, it's probably inevitable that the gap fill is going to take place off of maybe even just 1 or 2 more positives. Another, 1 or 2 more upgrades. If the revenue comes in above expectations, boom. That might be enough to pump the stock back up to 364 there, fill that gap. But I still say, even, getting back to book value, 2.5, 270, like that range, really shouldn't be a problem. Let's look at stock charts real quick. I'll let you go. RSI been climbing, still sitting here at 62.25 though, right? Can continue to climb up. Top Bollinger Band 164. We had the big pop up, right, after that upgrade from B of A. Now we have the tightening, consolidation taking place. Look at, the Bollinger Bands, of course, on a big move up or down. They trump it out, as you see. And now because of the consolidation, we have the curling and the tightening retaking place here. So that's why if it drops down again and continues to consolidate for a few days, it might be gearing up and ready to bounce up to whatever, 175, the 180s, right? And try to make a run for that psychological $2 level. Looks like the MACD was heading on the upside, potentially getting ready to cross. Might slowly, again, reject and pull back if the stock drops, but we'll see, because it has kind of healthily been bouncing off the mid Bollinger Band. So it doesn't necessarily have to drop back here to, 132. But we'll see what happens. 50-day moving average been climbing nicely, as you see. Mid-April, it was down here at 55 cents. Now it's up to 115, essentially doubling. The 200-day obviously was dropping with the stock because it was in this downtrend coming right out of the gate. And now you can see that now that it's having that U-turn recovery that we spoke about, you can see the 200-day starting to flatten out and calm down that accelerated drop, and is now curling and slowly heading back to the upside here at 85 cents. So in my opinion, that technically should be the bottom of the bottom, which I know is like a 50% drop from here. But like we always say, if you're building a position, you're buying in at $2.50, $1.40, and then it drops down to $1 sub dollar. Chances are, if you're able to have a couple of bucks cash on hand, you're probably going to roll it in and, dollar cost average down even further. But in my opinion, it does seem like it's setting up to pop higher. And we've been on the up and up, as we said, since basically like April, hitting those lows. And the RSI is still sitting here. It's in the 60s. So this is why I'm saying, again, we ran up. We can be consolidating, cooling for a second, and then boom, we may take the next pop higher, bringing this weekly RSI up to above that 70-plus benchmark before it starts to cool and sell off and drop back down to, 50 before maybe bouncing again. So, this is why trading is so difficult. But the MACD this whole time was really on the up and up, and you can see that we went to kind of retest and potentially have a bearish cross after last earnings, but then boom, we bounced on that B of A analyst upgrade, and we've been on the up and up again, potentially bull flagging, in my opinion. So we'll see where if the break happens. Let's look at the pivot points actually real quick. I'll let you go. Pivot point, what I say, right? What was book value? 265. Next pivot point, 259. Right? So this is why I'm saying, in my opinion, again, it's slowly going to, 180, try to retest that $2 psych level, which as you see was a previous pivot point. And then if it closes up above that and remains bullish, boom, you're going to get back to around 260, this pivot point, roughly book value. And then, you may have some short sellers try to jump in and bring it back down to 2 for a couple of quick bucks. On the daily... Yep, next resistance level, 196. Very close to that $2 psychological level. So that can happen. And of course, if we pull back, you see 135. And I was saying, again, if we potentially pull back and kind of retest this fib or meet up with this 20-day, we could be looking at like 136, 132. So that's why we kind of have a potential argument for either direction. But if we turn around, a month from now and the stock's at like 215, in my opinion, I wouldn't be shocked. I wouldn't be stunned, right? But if it does have that pop, obviously the MACD will cross to the upside, and that's what I mean. That'll fuel it even more, and that's why you'll probably see 2.5 after seeing 2. But again, for all you shareholders, I'm pulling for you guys. And right out of the gate, they were beating it up, and the company was just overvalued. Again, that's really what it comes down to, If you're going to take like 2-3 years to start generating like $5-10 million, you're not worth billions coming out of the gate, right? We know this. And I understand they want to take as much money as they can coming out of the gate, obviously. But also at the same time, as we always say, like it's not a buy until it's a buy, right? Even something as similar as a Palantir, right, was kind of overvalued coming out of the gate. And even though reports were more positive than negative for all those quarters, the stock, what happened? The stock was in a long-term descending wedge until, again, that one quarter, not only did they beat earnings, but they reported net income positivity. So that was the catalyst for the early breakout of that descending wedge, right? And now here we've gotten to a point where this company did some restructuring and we completely beat it up. We looked at the numbers again, big overreaction, potentially at this value here, 40 cents. And then that's when everyone started to scoop up shares. And then that's when the company started to beat on revenue. And now the company, again, price target upgrade from $1.35 to $3 or whatever it was, right? So now we're getting the positives rolling. And this is why I'm saying I think it's going to move over 100%. Gap fill 364. That's enough. I'm going to end it there. Once again, this is Stocks by the Numbers. I'm going to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually pretty quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky, they're volatile, they're very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thank you for your time. Have a good day.